I'm kind of curious. What are you thinking? Like, is this a little short-term bounce before maybe a longer correction? Is this feel like the bottom's in? Where's your head at?
I mean, there's definitely data suggesting that the markets could rally the rest of the year with the inflation coming down, Fed rate cuts. Q2 earnings has to be pretty good. I think right now the bar is pretty high. The markets are essentially at all-time highs. The multiples on all the indexes has certainly gotten a little stretched. So bar's high going into Q2 earnings. Earnings have to surprise to the upside, beat and raises. If that happens, and then we continue to get good macro data over the next month and a half, then I think we get the first Fed rate cut in September, and I think we're good to go. I don't think we need to get a 10% pullback like we did last summer. So I don't remember the exact numbers off the top of my head, but last summer, I think we peaked in July, and between July and August, I want to say the NASDAQ pulled back 11 or 12%. I think IWM pulled back 16 or 17%. And I think ARKK, pulled back like 35%. I mean, it got absolutely walloped. I don't think we need to go through that again, but earnings have to be good. Inflation data has to be good. Fed has to cut in September. If one of those things doesn't happen, then I do think we get 5 or 10% pullback. With my strategy, whether it's my investment strategy or my trading strategy, so I'll just break them down real quick so people know. I run 2 different portfolios, 2 different strategies. I have my investment portfolio, trading portfolio. My investment portfolio is 15 to 20 core holdings that I intend to hold for 2 to 3 years on average, sometimes longer. I held Celsius for 4 years, sometimes not as long. If the stock does really well, I might take profits along the way. If my investment thesis doesn't pan out, I might sell the stock early. But that's my long-term investment portfolio, 15 to 20 core holdings. And then I also have anywhere from 5 to 15 swing trades in that portfolio. Typically, my swing trades are higher quality names, more recognizable companies. Recent swing trades in that portfolio were C Limited, Lantheus, which just went on a 60% run last week. Palantir was a recent swing trade, Reddit. So names that you would recognize where I feel a little bit more comfortable about the fundamentals. And then my trading portfolio, I started running that separately at the beginning of last year. That is 100% swing trades, typically buying breakouts, but I typically buy strength, momentum. I don't try to buy stocks as they're pulling back to the 50-day, the 200-day, and hope they bounce. I'm typically buying stocks as they're breaking out through prior highs or breaking out of a recent consolidation, or sometimes if they're reclaiming a moving average, maybe they pulled back to the 50-day, consolidated below the 50-day for 3 or 4 days, and then they reclaim the 50. I'll buy it on that strength with the stop loss below the 50. So those 2 portfolios, my investment portfolio is up about 164% year to date. My trading portfolio is only up 36% year to date. So trading portfolio, much different strategy, much more disciplined with stop losses. So a lot of the stocks that contributed to my big gains this year in my investment portfolio, I tried having them in my trading portfolio. I just kept getting stopped out of them. I got stopped out of SMCI back in January before it went on that crazy 300, 400% rally. Same thing with Transmedics, Aspen, which have all contributed to big gains in my investment portfolio. Unfortunately, they've just been very volatile prior to those moves. Or in my trading portfolio, I typically don't hold positions into earnings unless I have a profit cushion. So sometimes, even though I had conviction in my investment portfolio, I don't have the cushion in my trading portfolio to hold them into earnings. And if they gap up 20, 30% on earnings, unfortunately, I'm going to miss those moves in my trading portfolio. So there's obviously a big discrepancy this year, or a disparity between the 2 this year, which it happens. I think in a bad market, in a choppy market, my trading portfolio will probably outperform because of the risk management. In a good market, my investment portfolio will outperform almost every time.
Yeah, I mean, still like super, super impressive performance, I would have to say. Well, let's talk a little bit about that. Maybe we can talk about some of those setups, coming into earnings. It can be like a tricky time to get involved in stocks. So I'm kind of curious, what setups are you specifically looking for How are you going about identifying them?
Actually, let me do hedges first, right? Because I know there's a lot of people that are paid subscribers that have been asking about how I do my hedges. Let me just cover that for a couple minutes. So in my investment portfolio, I run a pretty aggressive long short strategy. Typically on the long side, I'm anywhere from 140% to 180% long on margin. Obviously, don't do this if you're not experienced or you don't know how to manage risk or use hedges. And then I offset some of that risk with hedges, typically shorting NASDAQ, the IWM, and ARKK. But I use, instead of QQQ, I use TQQQ, which is the 3x leveraged NASDAQ. And then instead of IWM, I use TNA, which is the 3x leveraged Russell. So I'm typically running 60, 70, 80% hedges against the long. So my net exposure is anywhere from, it's low right now because just of the extra volatility last week. So when the VIX starts to spike, I get a little bit nervous, especially when I'm up 160% year to date. I don't want to give back those gains. So as the VIX was spiking last week, it was up about 30%. I was increasing my hedges. So my net exposure through the weekend was only, I think it was 65% coming into this week. For the majority of this year, it's been 85 to 90% on average. If we wake up in the morning and the futures are red, I'm going to keep my hedges on. If we get the open and things get worse, I'll typically add to those hedges. If we wake up and the markets are green, I might start trimming my hedges or covering them. If we open and things look good, I'll continue to cover them. And if we really start to rip at the open, I will try to get out of my hedges as quickly as possible. I'll take a little bit of a hit on them, but on days like today, and I don't want to get too deep into the weeds on this stuff, but one of my hedges is ARKK. Today was a perfect example of how I do it. So this Friday opened up here, ARKK ripped at the highs. I got out somewhere around here, got back in when we broke through the 20-minute EMA. So I'm back into my hedges here as we push back through the 200-minute. This is the SMA EMA 50. So when we push through, I cover it, get back in below, cover it, get back in below. But then right here at around noontime, we finally pushed through the 200-minute and the 50, and we stayed out for the rest of the day. So, I mean, in here, it's a little choppy. I'm taking little losses on my intraday hedging or trading around my hedges. But then right here, I get out of my hedges and then just trail the 50 EMA the rest of the day with my stop loss. In here, I got stopped back into my ARK hedge here or when we pushed back through. So if I'd kept my hedges the entire day, this would have been a pretty big drag on my performance. Instead, it was a very, very small drag. But when you are able to get out of your hedges in the morning on a very good day and you're 150, 160% long, you end up with a pretty good day on your hands. Same thing for TNA. We opened up this morning, popped at the open, pulled back, bounced off the 200 here. So I was out on the push through the 50, stayed out the rest of the day. I think I got stopped back in here, back out. So if you're going to run this sort of a strategy on margin with these aggressive hedges, you do have to be staring at your screens all day long, because this was one of those days where if I had set my hedges in the morning or took them over the weekend, didn't try to get out of them in the morning, or didn't cover on any of these breakthroughs or breakouts, I probably would have finished up. I probably would have been flat on the day because my hedges would have been such a big drag, about 1.4% on the day. So this strategy is not for everybody, but if you are serious about, at least in my opinion, this is just my opinion, if you are serious about maximizing your returns, this is the strategy that works best for me. But it is a full-time job to be sitting here all day long, watching your positions and trading in and out of your hedges. And then there's days where, flip this chart upside down, we open up, we take a nosedive, and then I'm basically in my hedges the entire day, unless we start to bounce. And I might try to cover at the lows with a new stop loss below the lows of the day. And sometimes those days just, they're not going to work. I mean, you're just going to be in your hedges most of the day. You're going to lose money on your longs, and then you'll probably make some money on your hedges. So maybe you're still in the red for the day, but the hedges certainly helps to blunt the damage done.
Yeah, and so you're pretty much using, it seems like the 50 and the 200 are kind of like the big main things you're monitoring, the moving averages that you're monitoring in this scenario.
Yeah, I use the 200, the 50, and the 20. Most often, at least on days like this, where, I mean, you can see, bouncing off the 20 here, bounced off the 50. So on days like this, those two, in my opinion, seem to be the most reliable on a consistent basis. Pretty much the same way. Once you got back above the 50, you only tested the 50 a couple times throughout the day. So it was pretty easy to stay out of that hedge for the majority of the day and let my longs do their work without any sort of a drag. This is TQQQ. This is the other one that I use. So it ripped it at the open, took a nosedive. So I was back in my hedge. I forget exactly when. Sometimes when you get this big of a spike in the morning, I'll start to get back into my hedge when we lose the 10-day, add to it below the 20, add to it below the 50. And then over here is when I'll try to cover on the way back up and stay out. In this case, I probably stayed out as long as we were above the 50, got back in here. And then once you start to get towards the end of the day, around 3 o'clock, if I get stopped back into my hedges, I'll stop screwing around with them and just watch. Sometimes you can overtrade. A lot of people have full-time jobs. They can't manage their hedges this way. So if that's the case and you are a paid subscriber, don't try to manage your hedges the way that I'm doing it, unless you're able to stare at your screens all day long. Just focus on my longs.
Interesting. Well, so that leads us to kind of the next thing here, which is your longs. Talk us through some of the key setup. We have worked with you over the past couple of weeks to build out some really awesome custom scanners for you. I was looking through them earlier this morning. That 52-week high breakout retest was pitching some monster setups. Palantir and UNH was in there today. There was a bunch of really good looking setups in that particular scan. Can you kind of talk us through some of your favorite setups or just general setups that you're looking for?
Yeah, so now we're going to kind of shift gears into swing trading. So like I said, my investment portfolio has 10 or 15 swing trades in it. Some of the names right now are Robinhood, Sentinel One, Amazon, Coinbase, Lantheus, Zscaler, Match Group, MongoDB, C Limited, Bill.com, Appfolio, HubSpot, Zillow, and GitLab. And they're not all like my ideal setups. Some of them are sort of special events, meaning GitLab, for instance, there are rumors that started circulating last week that they are putting themselves up for sale. There's rumors that Google and Datadog would both be interested. Google already has a big position in GitLab. Unfortunately, the GitLab CEO and co-founder announced on the last earnings call that his cancer is back. So, and then they also amended some of their severance agreements, which you sometimes see before a company is planning to get acquired, to make sure that all of their vesting schedules get accelerated. So if you sort of line up all the pieces, it does look like GitLab might setting themselves up to get acquired. So that's considered a swing trade, but it's sort of a special circumstance, because if you look at GitLab on the charts, I mean, it doesn't look great. If I was going to trade this one, I probably wouldn't want to own it until it pushed through the 200 SMA and then the VWAP from the February highs. Sentinel One, sort of a special situation as well. With what's going on with CrowdStrike right now, I do think Sentinel One will be one of the beneficiaries if you were trading this one. So I had this trade last week when we pushed through the 200 EMA. So I'll pay attention. So we got rejected on June 28th at the 200 EMA. Once we pushed through the 200, I started that position. I probably should have gotten stopped out last week, but I held on to it. I think my stop loss was either below the 21.23 or the 50, but then it just worked out pretty well for me that I was in that swing trade still going into Friday morning when the CrowdStrike disaster happened. And like I said, I think Sentinel One will be a beneficiary of that CrowdStrike mess. I did try to add Sentinel One to my trading portfolio today. It pumped this morning. I think it was up 13 or 14% at the highs. As it started to pull back to the VWAPs, I tried to get in my trading portfolio, ended up getting stopped out when that didn't hold. But I'll keep this on the watch list for tomorrow. And if Sentinel One does push through these VWAPs tomorrow, I'll get back in there. Lantheus is a name that I added to my trading portfolio today, actually both portfolios. So Lantheus is interesting because I actually got into Lantheus back here on May 2nd when it gapped up on Q1 earnings. So I do like to buy stocks on gap ups on earnings, assuming that I follow the company company and I have a rough idea of valuation and whether or not I think this gap up has room to run, meaning that there is a re-rating story going on here. And I've owned Lantheus in the past, and I had a pretty good feeling that this stock could run into Q2 earnings just because it was really cheap going into Q1 earnings. They beat and raised. Guidance was way above the estimates. So I thought the stock would pump, I don't know, 10, 15, 20% over the next couple months. It did that. It just didn't do it in the way that I thought it would. So gapped up. I bought it that day. I don't remember exactly what my entry price was, somewhere in the mid 70s. I added to it on this pullback into the moving averages. So that is one of my favorite setups out there, is either you buy it on the gap up, the day it gaps up on earnings, or you wait 3 or 4 days and you wait for those moving averages to catch up. Now, unfortunately, I'll just go to a stock like Aspen real quick. So Aspen was one of my biggest positions in my investment portfolio going into Q1 earnings. The stock gapped up, I think 25 or 30% on earnings. And unfortunately, if you didn't buy it on that gap up, you had to wait, almost 2 weeks for it to come back. Well, I guess you could so 1, 2, 3, maybe 5 days later, I guess you could have bought it off the 5-day. But you didn't get a significant pullback into the moving averages for almost 2 weeks. So in this case, you would have been better off chasing that gap up. Now back to Lantheus. So I was adding into this into the pullback into the moving averages, let it rally. I got stopped out somewhere in here, and then I got back into it on this bounce just a couple days before the big move. Now I'm trying to think. I may not have gotten stopped out. I might have actually held. I think it did, because I think what I was watching was, I think I stayed in it through this consolidation. I think I added to it on this little pullback, and I was watching this unfilled gap. So I think I was willing to write it down 74.92. And as long as that gap didn't start to fill, I was going to stay in Lantheus. And then on this day is where we got the news that CMS, which is the Center for Medicare and Medicaid Services, came out with their new pricing and reimbursement for radiopharma companies like Lantheus and the stock. I was at the gym, I don't know, 8 o'clock, 8:30 in the morning. And I saw the stock up 6 or 7%. Didn't think anything of it because volume was still pretty light. And then as we got closer to the open, I still hadn't seen any news yet, and the stock was up 15%. I wish I had added to it, because as soon as it opened, it rallied. I don't know, it was up 25, 30% at one point. I was actually stupid enough. I took profits. So I locked in profits at 30%, hoping that the next day it would pull back a little bit and I could get back in. And unfortunately, I played that one wrong, because it was up another 20 or 25% the next day. And then I finally got a chance to buy back Lantheus today. So on this pullback, we got the bounce off the 8-day and the VWAP from that first gap up day. So stop loss in my trading portfolio is just below that 8-day. Stop loss in my investment portfolio, where I'm a little bit more patient, is below the 10-day. So Lantheus worked out pretty well. Got in on the gap up, rode it into this big move here, sold too early, but now I'm taking another shot at it.
Yeah, glad to see you finally. We talked about this, like a week and a half ago, 2 weeks ago. Glad to see you're finally getting another opportunity at it. You're just anchoring a VWAP from that big gap up candle.
Yep. Yeah.
Awesome. And how are you determining where you're not interested in this anymore? At what point in the pullback do you say, no, it's time to cut bait? And
I'm going to keep it pretty tight. There's too much space here between the 10-day and the 20-day. So if it couldn't hold the 10-day here, I'd rather just get out. I'm not going to write it down. So my stop loss, I'm just looking at my spreadsheet. Stop loss to my trading portfolio is 112.50, very tight. And then stop loss to my investment portfolio is 110.
Gotcha.
So I'll keep it pretty tight. But even if I get stopped out, I'm willing to buy back this name once it shows some strength and reclaim some of these moving averages. But once a stock can't hold the 10-day, I'm typically out, at least when the chart looks like this. And then in order for me to get back in, we'd have to do more than probably reclaim the 10. We might have to push back through the 5.
And you're only using anchored VWAPs?
I use as opposed to
just standard daily VWAP.
I always anchor them to something.
Always anchored.
I do use a lot. So Sentinel-1, for instance, like I said, anchoring this one to this high here. Same thing for GitLab.
Yeah, it's literally as simple as just right clicking on the candle. That's kind of one thing that's so nice about the anchored VWAPs on TrendSpider. It's just super, super easy to.
I use them the other way too. So MongoDB is a recent swing trade for me, because part of my investment thesis now is or maybe that's not the right word, but for the last year, the only AI stock that we've really seen actually make money from AI is NVIDIA. That's it. Like, I don't know if there's another, I mean, maybe, I guess Microsoft, maybe because of their investment in OpenAI, maybe Google and Amazon to a small extent. But I mean, the FANGs were strong before this AI stuff. But I mean, none of the software companies or any other sort of cloud stock companies, cloud stack companies have really seen any incremental improvement in revenues or earnings from AI, not like NVIDIA. But I think that's going to change. And I think MongoDB is one of the companies that could change for. Now, the valuation of MongoDB, I still think is crazy, but I think the valuations on Snowflake, Palantir, I think they're all crazy. So I can't own those as core holdings. I won't own them because I don't think the valuations are compelling. However, I will own them as swing trades because I still think the fundamentals are good. I still like the businesses. They certainly could pick up momentum in a good market. MongoDB is a name I got into recently, and I'm using the VWAP anchored to that recent low for my support/stop loss. So if we close below this VWAP, that's when I would sell the stock. So yeah, so morning scan. So when I wake up every day, I go through 200, 300 charts. I go through the last 5 or 6 days of watch lists just to make sure that there's not any stocks that I missed that are about to break out or coming out of consolidation. So that's sort of the first thing I do. The next thing I do is I go to these custom scanners that you guys help me create. So there's one for breakout and retest. There's one for power gaps, power earnings gaps. And then there's a consolidation one down here somewhere. So if we just look at the first one, so I typically search in the Russell 1000 first. And like I said earlier, so the swing trade setups I'm looking for are breakouts, consolidation, retests, reclaiming important moving averages, support levels, pushing through VWAPs, that sort of thing. So I got into a few of these trades today. Maybe I should go through real quick the ones I got into.
Can we talk through your mentality around what this scan is looking for?
This is like a perfect cup and handle. So I've had a lot of success over the years trading these sorts of patterns where a stock puts in this cup and then gets rejected at the prior high, comes back, tests some moving averages, support levels. And then once it pushes through, that's when I want to be in the stock. So I'm going to either buy this stock on the breakout through one of these highs. I mean, sometimes these are like literally within pennies of each other. Sometimes they're, in this case, the high here was like 156.86. The high here was 155.35. So I would probably buy it on the breakout through. So usually I'm going to look at the red candle. I don't know if others do this, but I'm going to look at the high on the red candle and use that as my gauge. So in this case, I probably would have bought GNRC on the breakout through 156.48. If I missed the breakout, then I want to buy it on the retest as it comes back and retests and bounces off of this support range.
Right. And specifically what this scan is doing is it's looking for a breakout that had occurred and then price coming back in. It's specifically a breakout retest scan. So you find that breakout, you give it time to consolidate, come in, and then it's looking to let you know, hey, price has now come in. It broke out recently from that 52-week high. It's now come in. Now it's another opportunity to take advantage of a long.
This is perfect, right? You get 3 or 4 days of consolidation around these prior highs, and then you finally get this bounce. So I didn't get into this one today. I probably should have, but this is one that'll be at the top of my watch list tomorrow. Now, I don't know where I would buy it tomorrow. I mean, obviously I could buy it above 161.10. I would definitely try to buy it if we got another retest on this support. Yeah, that's definitely a good looking one.
Yeah, there were a bunch that look like this. And I guess it's kind of not a surprise to see this because you just had multiple days of price coming back in on the indexes. It makes a lot of sense, right? That this particular scan works in a time like right now.
So this is one that I didn't take today, but this one's on my watch list again tomorrow. So we got the breakout a week ago. Now you get some consolidation back into the moving averages. On Friday, it bounced off the 7. So I'd be looking to get into this one, perhaps on a push through 28.49, ideally on another bounce off the 5 or 6 day. This is one that will definitely be my watch list tomorrow. So you have these highs from March. March if Lowe's can push through either 78.25 or 78.57. Looks like 78.57 was where it got rejected today. So that's probably the number I'll focus on tomorrow or whenever it finally pushes through. So this will be on my watch list for as many days as it takes until it finally gets through 78.57. I mean, Amgen looks pretty good. Blackstone, see so now that's a little bit too extended for me. So
right, kind of missed it, huh?
Yeah, I mean, ideally, I would have gotten to this one on July 16th. So opened here, closed there. If it opens, so something like that. I mean, maybe it even opened up just below resistance. And then as soon as it pushed through, or maybe after it was about 0.5% above that resistance line, that's where I should have started my position. Or on the next day when it retested, bounced off of it. But I probably would have gotten stopped out this day. So, it looks like maybe it gapped down. So that's where it might have gotten a little bit dicey. But either way, I mean, now it's just too extended for me.
What about with earnings coming up? Like, I'm pretty sure Lowe's has earnings coming up in just a couple of days on the 29th. How are you thinking?
What makes me a little nervous during earnings season is you have to try to think through what stocks are reporting that might influence the stocks that you already own or are looking to get into. So for instance, today I got into On Running in my swing trading portfolio. So I got into On today on this bounce off of the VWAP. But the problem is that Deckers and Skechers both report earnings on Thursday. Both companies are in the footwear space and will most likely have an impact on how On is trading the next day. So if I don't have some sort of a profit cushion going into Thursday, I would probably have to get out of the position because it's just not worth the risk that Deckers ends up crapping out or Skechers does, and then they take down On with them. Why? I mean, Deckers owns 3 or 4 other brands like Teva and Uggs, but Hoka is their major brand right now that's been absolutely crushing it. So, I mean, and then just Google tomorrow. A lot of stocks are going to move from Google. So Trade Desk, I thought about getting into Trade Desk today in my trading portfolio, but they're a big advertising company. Google's the biggest advertising company. And I was worried that if I got into Trade Desk today, I have a small profit cushion. If I hold into Google earnings tomorrow, Google gaps down and then takes Trade Desk with it. So to me, there just wasn't that was just too risky. So I hate earnings season for that reason, is because sometimes you get these phenomenal setups, but it's just, I can't justify taking them because of other companies reporting that might take down the stock with it. So, I mean, Trade Desk pushing through this VWAP would have been a perfect trade for me today. I did get into Magnite though. So MGNI, I did get into this one on the push through that VWAP. So I don't know. We'll see. I mean, if it trades really well tomorrow, I might hold into Google earnings, or maybe I sell half of it.
Interesting. Once Google reports, then you got everybody else to deal with, right? Like how long before a really important earnings result are you kind of taking your hands off the wheel? And how long after a really important earnings result are you putting your hands back on the wheel?
Yeah, I mean, I don't have any exact numbers. Yeah, I don't know. I mean, I don't have any strict rules around that, but I mean, these next couple of weeks with the mega caps reporting are certainly the stocks that can move the broad markets. Google could take down the NASDAQ very easily by itself with a really bad report, really bad guidance. It does look like the mega caps are spread out a little bit more this year. I mean, there's definitely this season, there's definitely earnings seasons where you have like the 6 or 7 largest companies in the world all reporting within 2 or 3 days of each other. So that's a pretty scary week to be buying anything in tech or software. So, for instance, if we had Apple, Amazon, Microsoft, Meta all reporting this week, I would probably stay as far away from tech, cloud software, ad tech as I could going into this week. And I would look at trading, energy, industrials, financials, other sectors not related to the mega cap tech stocks. But it looks like this week, this earnings season, they're a little bit more spread out. So I don't have to be quite as careful as I usually am. But there's still special situations, like I said, with On Running. For instance, Aspen Aerogels. So that's a big position in my investment portfolio. portfolio. They have a couple really big customers. GM is one of them. GM reports tomorrow morning, and it's possible that whatever GM says around their guidance for EV sales this year could impact Aspen. So for instance, this chart doesn't look great right now. So it's not like I would have traded this. Like I'm not looking to get into a swing trade right now for Aspen. It needs to show a little bit more strength. Probably needs to get through this VWAP or the 50-day. Let's just say it pushed through the 50-day today. There's no way I'm getting into that name today, knowing that GM is reporting earnings tomorrow morning and could move the stock 5 or 10% in either direction. Just like, I mean, I don't trade a lot of oil stocks, but like if I knew there was an OPEC meeting tomorrow, like I'm probably not looking to trade oil stocks or get into new positions today, knowing that there's an OPEC meeting tomorrow. So there's always these news, these events that can move the stock one way or the other. It's just amplified during earnings season.
Yeah, and that's part of why we built your power gap scanner the way that we did. Instead of specifically looking for earnings power gaps can happen anytime. So right. If we just define power gap, then we're good to go. Based on our conversations with you, it seems like the power earnings gaps is really something that you're kind of hot on, something that you're looking for all the time. If you,
most of the time you're only going to get them on like a big newsworthy event. Other than earnings. So we have power earnings gaps, and then we have power gaps, right?
Yeah. So, on the power gap side, there's actually a good looking one. DHI looks kind of like it's a mix of a couple of your setups. Like it just made kind of new highs. It just broke through a high on a power earnings gap, consolidating higher. It's a good look.
So this is another one so this will definitely be on the watch list for tomorrow. So I would probably get into this stock. I'd have to check when they're reporting earnings, but if it opens up above 61.99, I'd look to get into that. Techs. So that's the thing, like when I'm swing trading, I'm always trying to figure out where I can manage my risk. What level could be resistance? What level could be support? What moving average or VWAP do we have to push through, or might we pull back to and bounce? And like here, it's just kind of in the middle of nowhere. So there's just nothing I can do with that yet. I mean, I could say something like that if we push through 62.93, but I don't know the importance or relevance of these candles right here. So this is a name that I probably wouldn't trade. Pi, that's a nice looking one. So that's the kind of setup that I wish I had seen earlier today. Yeah, so it looks like it opened up just below these highs here. So as it pushed through, that would have been a nice breakout trade. So that's a nice one right there. So pushing through this high, DHI. So that's a little
extended.
Yeah. I mean, unless there was so I mean, if I had gone to the weekly chart and seen something back here, 2-3 years ago, there are some stocks right now that are starting to push through their 2021 highs. So HIMS.
Right. Yeah.
So for instance, HIMS got rejected a couple weeks ago at these highs from 2021. I'm not in the name right now. I mean, if I was going to get back into the name, I have owned it recently, but this is the level I'd probably be looking at if it pushes through 2504.
For the person in chat who's asking what a power gap is, it's when you have essentially some sort of news event will cause price to kind of gap up from the previous day's close and previous day's high. And you never make a daily low below the previous day's high. So it leaves a gap. And generally these things occur on volume. Generally they occur because of some sort of fundamental change, whether it's a new contract for a company or an earnings beat or something like that. So these are really powerful. Lots of traders are looking for these power gaps where price just smokes higher and then just kind of continues higher. It'll consolidate some, but Jonah, you can kind of speak to this better. On a power gap, you're not wanting it to come back in too much. You're wanting it to gap up and kind of continue going and going and going.
Unless there's a support level or moving average that I want it to pull back to and bounce off of. And I'll give you a couple of examples in a second. But so Corning's an interesting one because a couple of weeks ago, I think it was on earnings, it up 15% maybe on the day and pushed through these February 2022 highs, almost got up to the all-time high, got rejected just above or just below these all-time highs from April of 2021. And now it's kind of in limbo, but I'm looking at this one. It's on my watch list. this. If it pulls back a little bit more and bounces off of 43.54, I'll get in, or I can wait for it to push through those all-time highs. I would get in there too. I'm trying to think of like a good example of a power earnings gap that I got into recently. Yeah, it was. So Match gapped up a couple weeks ago or a week ago on reports that a big activist was taking a position. So I bought it as a swing trade on this pullback to the 200. So gap up on that news and then pull back to support, bought it there. So that's why that's why this line right here. So my stop loss is just below the 200-day.
Mara is another really, really good looking one, kind of in a very similar setup too. Big gap up and coming back in. Looks right up your alley.
This was probably from the Trump assassination attempt.
Yep.
Where it looked like he was taking a lead in the polls. People think that Trump is probably better for Bitcoin and crypto. So today I got into coin. So I already had I bought coin as a swing trade in my investment portfolio on this pullback Thursday to the VWAP from these highs. So that's when I got in my investment portfolio swing trade. And then today in my trading portfolio, I wish I had bought that in my trading portfolio the same day, but I got in today when we pushed through this resistance here. So 263.55 for whatever reason has been resistance multiple times over the past couple months. So as we started to push through that today, I got in with a position, stop loss at 258.27. So I'm risking a little less than 3%. So that's kind of my play on. So like Hood and Coin are kind of my plays on crypto. They're a little bit less volatile. The Maras and the Huts and Clean Spark, those things can move a lot.
Right.
But certainly Mara. So I'd be looking to get into this one if it can push through 24.63. So it was on my watch list this morning. I just didn't get into it and then it reversed. So I mean so I was up. I think my trading portfolio, I was up 10% from when we got that cold CPI number. Russell rallied 11.5% over the next 5 or 6 days. And I think the next 5 days, I think I was up 10 or 12% in my trading portfolio. And then I gave half of it back on Thursday and Friday, or Wednesday and Thursday of last week. And then I took Friday off because it was just, the market was just too choppy. I was getting stopped out of everything. Every breakout was failing and things were reversing. And, when I see that for 1 or 2 days in a row, I need to kind of take my hand off the trigger and back off from trading because I was overdoing it. So, I mean, we definitely saw some reversals today, certainly not to the extent that we saw them last Wednesday and Thursday. But I mean, this market, like there's definitely some good looking charts. Just, I feel like the breakouts aren't quite as powerful the last few days as they were in the 2 or 3 days after the CPI event.
Yeah, it could be exactly what you said, right? Everybody is kind of sitting on their hands a little bit with such big earnings coming up over the next couple of days, weeks. Maybe everybody's just kind of trying to be a little bit more cautious.
So some of the other trades I did today in my trading portfolio. So app, when it opened up above the 50-day SMA, I jumped into that one. I got into INTR. So that's one that I got in when it started to push through 696 reversal. So, I mean, my stop loss is pretty tight. I might get kicked out of that one tomorrow, and then I'll just keep it on my watch list and try to get back in whenever we push back above 696. GRMN, I don't know if you saw that one on the scans this morning. So that's another one that looks pretty good. I mean, that's where I definitely saw it. So prior highs, make this nice cup, come through, then back and retest. Now, whether or not this turns into a handle, I don't know, but that's why I'm keeping my stop loss pretty tight just in case it does. So it's certainly possible we get a shallow cup and handle, or, tomorrow we push through 173.83 and off to the races. But yeah, this is one that popped up my screens this morning. Another one that popped up my screens a couple of weeks ago was Helix. So I've been in this stock since July 11th. So July 11th, so got in on the push through 1198, and I've been in that stock ever since. So that's turned into a pretty decent trade. This is another one I got into last week when we pushed through 4121. Was one that came up through the scans as well.
Yep.
TPG, got into this one when we pushed through 4722, still in that.
That's awesome. So you're really finding a lot of great setups with these scans.
Oh, yeah. Yep. CLBT is one that I got into a week ago. So I got in on July 17th and we pushed through 1250. So yeah, oh no, those scans definitely help a lot. As we get into earnings season and we start to see some of these power earnings gaps, those will also start to pop up. But the tricky part is, I mean, so Q1 earnings was very, very good to me because some of my biggest positions had these big gap ups. So I showed you Aspen before, ASPN, that had a big gap. And that turned, looking back, you needed to buy that one on the day after they reported earnings or as soon as you could, even in the after hours trading session, because that one took a week or two to pull back into the moving averages. Transmedics kind of did the same thing. I mean, it gapped up, closed there. So opened up 16.8% higher and then pulled back a little bit and then just ripped. And I mean, before you got a legitimate bounce off the 5 or 6 day, if you had just bought the open there. So yeah, so you're maybe 12% higher by the time you get a chance to buy it on a bounce off the 5 day.
Crazy.
So that's where, I mean, it is easier to buy these gap ups if you have a better feeling for the company, the fundamentals, the valuation, because there are plenty of times where a stock gaps up on earnings or gaps up on some news event. I mean, look at Chewy.
And it gives it all back.
I mean, Chewy gapped up on that news that Roaring Kitty was taking a big position. And then, I mean, look at that monster fade. I mean, just horrible if you owned it or chased it higher. So, I mean, you do have to be careful. I mean, not all of these gap ups, end up looking like an Aspen chart or a Transmedics chart. I mean,
right.
You gap up 10% and then give it all back. I mean, I think SoFi is pretty famous for this, where it feels like SoFi gaps up every time on earnings and then gives it all back the next day.
How do you think about taking profit? There's a question in chat that's actually a really interesting question that we haven't really addressed. Talk a lot about the risk control piece, but like, how do you go about taking profit?
In my trading portfolio, when a stock starts to look a little extended is when I'll typically start to take profits in that swing trade. And then I'm moving up my stop loss along the way. So let me just look at like a recent trim in my portfolio. So JMIA. So I'm not in this name right now. I got in, I think I bought JMIA on this day, July 9th, when it pushed through $10. And then as we got pretty extended up here from the 5 day, 6 day is when I started to take profits. Also, when you start to get a candle like this, what do they call it? It's a shooting star candle, spinning star, I forget.
Reversal doji.
Yeah. So, I mean, candles like this where, exhaustion candle, whatever, just the stock's clearly getting tired, clearly extended. That's where I'll typically trim about a third of my position. And then you get a pullback here. So in the case of JMIA, I probably had my stop loss below the 10 day on the way up. So stayed in this one. And I forget exactly where I got stopped out. I might have had my stop loss even tighter than that. So that's typically where I start to take profits is after a 3, 4, 5 day rally like this, where the stock starts to look a little extended. I think it might pull back, but I want to try to stay, I want to try to at least keep some piece in there. Right. I'll typically trim 25 or 33% of the position and then let the rest ride with my stop loss.
Gotcha. And the stop loss is a hard stop, or is it you're putting it in manually?
My trading portfolio, it's typically a hard stop. In my investment portfolio, it's a soft stop that I'm kind of going on feeling. Sometimes I'll move it around if I feel like it might bounce back the next day, or I'm willing to be a little bit more patient with the name, or sometimes I just want to see where it closes. There's a pretty important, so I got stopped out of AMD last week because it closed below the 200. And I just had a big NVIDIA position. My conviction in NVIDIA is much higher. I also have a much larger capital gain with NVIDIA. So if I was going to sell one, just in terms of tax consequences, it makes more sense to sell AMD. This was last week when the semis were all acting like shit. And you had the Biden regime talking about more bans, export bans. You have Trump talking about Taiwan should start paying for our military protections, blah, blah, blah. So semis were acting like crap. I had a lot of semi exposure. I had NVIDIA, AMD, Micron, Supermicro, and I just didn't want all that exposure. I had big gains in NVIDIA, big gains in Supermicro. So just for tax reasons, it made less sense to sell those and more sense to sell AMD and Micron. Now that AMD is back above the 200 day, I'd consider getting back into it. But like for me, a name like this, where it wouldn't be a core holding again, it would be a swing trade. Like the 200 is basically like line in the sand. If you close below the 200, it's adios. And then I could always buy it back if it reclaims the 200. Like there's no law against that. So, and then Micron, sort of the same thing. So I did not own the stock here. I bought the stock on this pullback here. So I bought it one of these days on the pullback to this prior high, and then I got stopped out below the 50s. Now it looks like for whatever reason it's bouncing. So that's 3 days it's bouncing off of the VWAP from this gap up on December 21st. I'm assuming that was probably Q3 earnings. So I'll definitely watch this one tomorrow. Like, I mean, this is kind of a falling knife still. I mean, that's a lot of red days in a row, but it's clearly finding support at this VWAP for whatever reason. So to me, that's at least, it's worth watching, see what it does the next couple of days.
Right on, Jonah. Well, this has been awesome. It's been fun picking your brain on kind of these different setups. For anybody who's tuned in, who's interested, Jonah's got a killer discount on TrendSpider right now. You can save up to 65% off your first year of TrendSpider. And if you sign up using his link, you get access to these 3 scans that we've kind of been talking about: the power gap, the 52-week breakout retest, and then the consolidation scan.
Well, there's 4, and then there's the power earnings gap too.
Yep.
So all 4. And then like I was doing, so you can search these, so you can do all these scans and run them through NYSE stocks. You can run them through the NASDAQ stocks, the Russell stocks. So that's, this is part of my process every single morning, looking for these stocks that are breaking out, coming out of consolidation, pulling back to prior highs. And that's where I have the most success trading these sorts of setups.
We're going to dig in. We're going to be doing a couple more of these webinars here over the coming weeks and months.
We're doing them every 2 weeks for the next few months. So Please give some feedback. You can email the guys at TrendSpider. You can email me. You can message me on Twitter. And obviously, we're only doing them for about an hour each at a time, but we're going to do at least 7 more of these. So, I mean, this was just a touching the surface on everything that we want to cover over the next 7 webcasts. So give us some feedback and let us know what you want to hear more of, what you want to hear less of. Do you want me to talk more about hedges? Do you want me to talk more about, the sorts of setups that I'm trading, how I manage risk, position size? So there's a lot that we can do. And then we can get into other sorts of screening fundamentals, looking for core holdings for my investment portfolio, and where I look for my deep dives.
Yeah, definitely. Would love to dig in on some fundamental screening with you on this too.
So here's another one I got into today. So I missed the breakout, and then now you get this pullback to prior high. So I got into UWMC today at 778 with my stop loss at 768, but I'll probably move it down to 767. So once again, like this is the stock I found through the screener, breakout, and retest. So, that's where these scans can definitely save you a lot of time. Otherwise, you're going through hundreds and hundreds of charts trying to find these ideal setups. Yeah,
super helpful. I mean, man, I've learned a ton just helping you build these things out, learning kind of what you're looking for. And it's given me a whole new light on a whole new set of setups that I wouldn't have known about previously.
Subscribe to Jonah Lupton YouTube channel for more videos, and visit www.luptoncapital.com to check Jonah's various investing and trading services.